Okay, we're going to go ahead and start, everyone. I want to thank you all for coming today. It's a little different environment. It's been over a year, believe it or not, since we've had one of these. I'm sure you all can believe it. It's been quite the year, and we're so happy to be able to start having these meetings again. We enjoy them, and we definitely looking for your feedback and your our conversation today. We want this to be a conversation. It's pretty much informal, small group here. We did discover that maybe we need to update our list a little bit, make sure we're getting everybody contacted. A few people were unaware that we're having it, but with the first one, I think we're doing good. We're also recording this today, so it'll be on our website, a link to get that, so those that could not attend will be able to go on there and watch at their leisure, or if you want to review something or couldn't understand what I said or something because I talked too fast, you can go on there as well. So I'm going to start out just today real quick. My name is Doug Kropp, and I'm the grain merchandiser for Premier Cooperative. For those of you who don't know me, I've been here for about 2 years, not quite 2 years yet, but really close, and work in the Champaign office and with the farm marketing team. And with that, I would like to welcome Tim Hughes. We have a new CEO since the last time we got together, and I'll have him just give a few words about himself.
Sure. Thanks, Doug. Just wanted to introduce myself real quick. Actually, today is my 3-month anniversary. So I came over from United Prairie. If you're familiar with UP, which Premier is one of the majority owners of United Prairie, I spent 17 years with United Prairie, 14 as a general manager and 3 as a sales agronomist. Other stops in my career, I was with Cargill Grain Marketing and Pioneer Hybrid. As other steps in my career path, I guess you'd say, but I'm from the area. My family still farms in the Philo, Sydney area. That's where I was born and raised, went to Unity. Wife and I live in Tolono and have 2 grown children now, so I just turned 50 a few weeks ago and crossing over to that not quite empty nester, but we're trying to encourage it one of these days. So other than that, I'm happy to be here and appreciate you ladies coming this morning. So, thanks, Doug.
I also want to introduce Sean Kincaid, our CFO, kind of fairly newly in that position since the first of the year or so he's got a couple comments.
Yeah, just wanted to introduce myself, make myself accessible to you guys. I joined Premier in August and slid into the CFO role in January. Been in the area quite some time, been in Champaign about 8 years, graduate from U of I, but originally grew up in Piper City, Illinois, about an hour north. My wife and I live in town here in Devonshire, and really excited for what we've got going here at Premier. A couple things to update you on, and we'll hear more about this as the meetings go on, but we are switching accounting software, so as anything technology continues to evolve, Premier has probably, by my own opinions, been in a situation where they've had inadequate software to do what we want all of the folks that interact with you on a daily basis to be able to do, easily get you guys the reports you want, easily be able to price the grain you guys need to, and make that information accessible. We didn't have that system, so we are moving to that system at the end of our fiscal year, which is 8/1, August 1st. So that transition is full steam ahead. I would say we're we're putting the difficult stuff behind us, so I'm kind of getting excited myself. I'm going from nervous to excited. So I really do think that you guys are gonna like it. I actually have been through, from operations to origination to management now, and the reports that you guys are going to be able to get are going to be so useful and so handy, easily read, easily communicated to people that you're talking to. So I guess look forward to that, and you'll hear more about it, like I said, as the meetings go on. So look forward to working with you guys.
Thanks, Sean. I'll introduce a few other people that are with our team. We have Jessica Eads, our marketing, and she also works out of the Dewey location as well. That's where she's based out, so you might see her around there. If you work at Dewey, we got Eddie Hannigan. He works the farm marketing team. We have our whole farm marketing team here, so got any questions at all, or just to see the area, he's out of the Royal area. We have Darren Wax, he's out of Sydney. And then Lane Abnady, he's out of the Isdale area and works a little bit out of Champaign as well. And then Tanner Salzgaber, if you know him, works out of Dewey. He's not here today. He's off today. So the first thing, I'm just going to do a little bit on the market outlook. And just looking at the screen here, and Lane can give you an update again when he gets up here, but corn's up 30 cents and beans are up over 30 cents here this morning. We were up limit at one point on the corn on the nearby July. Actually, July, September, and D's all hit limit for a little bit. Why? I don't know. Maybe you guys could tell me. Weather. I mean, we had a 3-day weekend and a new month. So people were out, so they come back in, want to get back in the market. The weather was kind of iffy over the weekend. We had the end of last week, some really cold temperatures up in the plains and a few other areas out west where they had some frost damage on the corn and the soybeans. I don't think the corn was hurt much, but there were some pictures and some things going around about some soybeans being hurt. And we all know, and we'll talk about it a little bit here, we have a really tight situation supply-wise. So we need to have a big crop. And so anything that's even an inkling of maybe changing that just a little bit is going to be looked as price enhancing. And then we had if you heard this story or not, but JBS, which is one of the world's largest cattle processing companies. They're Brazilian owned, but they have assets in all of North America and of course South America. And they had a cyber attack. And it's, this is the world we live in, where we had this pipeline, just a few weeks ago. Now they've had a cyber attack on their software systems, and everything's computerized, even though it's, the slaughter plants and stuff like that. So there's some of those shut down, and they're trying to say maybe some of that strength of the corn market is from that. Cattle market's down like almost limit because they can't process the cattle, but I suppose you're feeding them longer, maybe a few more days, so that could be trying to find grasping at straws to figure out why the market would be up as much as it is. But I think it's more of a lot of uncertainty, a lot of anxiety right now about the production and supply, and so any little thing is going to have us go up or even go down. So we saw that happen a couple weeks ago. We were down limit in corn, and we were up, a couple days later. So it's going to be a wild ride, I think, here for this marketing year, until we can get a little more stabilization on what we're going to have for production. So this is what a difference a year makes, and we talked about we haven't been together as this group here for more than a year, and that's pandemic related. And if you go back about a year ago, and it actually was even lower than that, but $3 corn to now up, we went over $7 on the nearby month. And you guys all know this, but it's just kind of pretty interesting to see that on a graph in such a short period of time. Here's the soybeans, same type of thing. And if you think about it, on corn and beans, we just got off a pandemic year. We had sold our crop too cheap, or we thought we did. Well, we did, but we had to the year before. We had $4, $4.55, beans maybe 10, 11. We sold. I mean, those are good numbers, and we just got off of your thing. So some of these higher prices are nice. There's some grain left out there, but not a lot. A big majority of the crop was sold at harvest or shortly after harvest when we had these great opportunities. Little did we know it was going to keep going higher. Another thing that could change one of the things that can change the progress of the crop always is the crop planting. Now we'll have another one out this afternoon since it's Tuesday, delayed from the holiday, and we basically will have most of our corn in. As of a week ago, we had 87% of the corn planted, and that's compared to a 5-year average of 80. I would say estimates today are probably in that 92 to 94%, and that last little bit always just takes a little while. So they'll pretty much say that corn is planted. I mean, that's then on soybeans, we had in 2021 we had 75% of the crop planted a week ago. Probably looking at somewhere around 90% for this afternoon's report. Same thing there, basically planted. When we get above 90, the market just says, okay, it's in. There's always some that gets planted later, double crop beans, that type of thing. The other thing about the report today, this afternoon, comes out at 3. As far as the progress, we'll have our first crop rating for corn. I don't know about beans. I think just corn this time, and beans come out next week. And anticipation is around 70% good to excellent, which is pretty typical. The average for a 5-year average is, I think, 68 or 69% for the first rating of the year for corn. But we're going to need to keep those ratings up there and keep the growing conditions right there to meet trendline yield. Drought monitor, of course, weather. I mean, that's the biggest thing we're going to be talking about and watching here in the U.S. and also in the world. I mean, Brazil crop continues to be smaller because they had a dry growing season, and now in major part of their second corn crop growing season is their winter time or their dry season. So they're not going to get a lot more rain. They're not, normally don't. So their crop went from like 120 million metric tons to some people having all the way down to as low as 90 million metric tons. The USDA is using, from the May report, about 105. Most of the people in Brazil and the organizations over there that know are in that 95 million metric ton range. So going to be less corn available in Brazil, which should mean more exports for us next year. Forecast, I always look at every day they come out with a 6 to 10 day and an 8 to 14 day forecast. They'll update it at least once a day. This is the one from yesterday, or a couple days ago, I guess. And we had precipitation, looks like it's going to be okay in the 6 to 10 day, maybe, but just average. And in those same areas where it's really dry, if you look in the Minnesota and Dakotas and parts of Iowa, there aren't going to be any extra rain. Of course, the subjects change. And then temperature-wise, I think that's another reason why we're up today on the corn, is we're going to have not a lot of rain, and it's supposed to be above average temperatures in much of the upper Midwest. Not once we get through this front that's going through here now, by this weekend, we're supposed to have, end of this week and this weekend, have temperatures in the 80s and 90s, maybe even approaching 100 in the plains states. And I think that's part of the, we're getting into summer, so I guess that makes sense, but that's part of the market reaction. And this is try to guess this 3 month. We have a hard enough time getting tomorrow's forecast, but basically saying it's going to be warm and maybe not extra dry. Equal chances of normal precipitation and maybe continue to stay dry to the west. So not a lot of grain. We got the Dakotas and Nebraska in there, but most of the grain belt looks like we're going to hopefully get timely rains. Yes, question? Sorry.
I was just gonna ask you, what's our rate of our moisture, say from last year, how much rain we've had to now? What is that?
Yeah, I don't know if I know that exactly, if anybody else knows a little more on that, but we are in okay shape. When you look at our subsoil moisture to start the year and that, we're all right. We're not, but we don't have a lot of extra in most of our growing area. So basically what that means, if we get normal rainfall, normal temperatures, we potential for a really big crop. But if we get any time where we get a dry stretch in there, I think it could suffer pretty quickly. But we're in better shape than a lot of areas right here in central Illinois. Supply, that's really what's kind of driving most of our market and what's been concerning here for the world. This is from the May report, the USDA ending stocks, and this is from a world perspective, because we need to look at things from a world. I mean, that's really what we're trading. And you look at, what I look at here is last year, and I think even the next slide's got some on this, but they lowered it from 283.9 to 283 million metric tons on corn, and soybeans are about unchanged. But if you look at it from a year ago, it was 304 million metric tons and 96.5 million metric tons on the beans. So we are lowering our world carryout, part of the reason why we've seen this market increase. And a lot of that is to do with China. They continue to import larger quantities of grain as they've rebuilt their demand in their country with the swine herd that a couple years ago was devastated with African swine fever, and they've got that back to up to those levels prior to that, for the most part. They had little breakouts here and there, but their swine herd is giant, big demand there. This is the same chart, basically just shows year over year difference. So basically on this one, on the right hand side, it shows what they're going to do next year. So you look at this year, they're looking at 26 million metric tons of corn and 100 million metric tons of beans imported by China. And next year they're looking at the same amount of corn, so still really big. And they've already bought about 30% of our export program for this next year. China's already purchased. So that's kind of interesting, way ahead of last year's pace. But of course they started it later in the year last year. And then soybeans are looking at to be a little bit bigger. And it was a really robust soybean import program by China last year. So they're still going to continue to grow and use a lot of grains. A lot of people to feed there. This is a chart for world supply and demand by and production by country. And when we look at this, the one I want to look at is that Brazilian corn. I think I said 105. I was wrong. 102 is what they had for their May report, but a lot of those people have that down to 95 million metric tons, or even some as low as 90. Kind of like I would say in about half of their growing region for their second crop corn in Brazil, they grow beans and then they'll plant corn after that, and they call that their second crop because they'll have some first crop corn as well. In that most of that growing area, it's kind of like a 1988 type of year. So for what we had, or 2012, maybe closer to 88 though they're saying, but those last 2 dry years, that they're major drought, significant production effects. And then on this chart here for worldwide, I mean the rest of them they didn't change a whole lot, but we do compete obviously on the wheat market. Pretty much everybody grows wheat and exports it, and then on soybeans, Argentina and Brazil are our biggest competitors there as well. Argentina a little bit more on soybean meal. They process a lot of their meal, beans. Then you look at acres. That's going to be the next thing. We had a March 31st planted acreage estimate, and that was at 91.1 million acres. And it gave us a carryout of this next year of 1507, or 1.5 billion bushels of corn, which is still really tight with 180 bushel, or just under 180 bushel yield. So basically a record yield we need, and we're going to have 91 million acres, and we're still only at 1.5 billion. This year we're going to end up with about 1.2 billion bushel carryout. Not a lot of changes on last month's report, but still a very tight corn balance sheet, and it might fluctuate a little bit from there, but either way, it's going to be big. Watching the acres, however, it's going to be important as well. We'll have that at the end of June. We'll have our final planted acres, or our estimated acres. We'll update that. And a lot of the advisory firms and estimates are saying that they were off a couple million here. We planted a little bit more corn. Planting went well. We might have 93 or 94 million acres of corn, which will help, but still I think puts us still well below 2 billion bushel carryout, which is, in this day and age now with the demand we have, it's still pretty tight. Beans is even a tighter situation on that. They had 87.6 million acres that were going to be planted this spring, with a 50.8 yield, got us down to a carryout of 140 from a carryout of 120 this year. And they haven't changed that 120 number for 4 or 5 months now. And that comes down to really, we can't get much lower than that. 120 is kind of, 120 million bushels of beans is kind of what's in the pipeline. It's what's at the processor, on the rail cars, on the trucks. We have seen a little bit of demand destruction on soybean demand on the bean meal side. I don't know if you've noticed, but the crush plants, and we have some local crush plants around here on soybeans, they've dropped their soybean basis about 50 cents in the last 2 weeks. Kind of hard to react to. I mean, you got the cash prices going up and down. We know all about that every day in the futures market, but when the basis changes, there's really not a lot of notice. That's an old crop, but hard to react to. Wheat, we don't want to talk about much of that other than, once again, it's a situation where we're getting a little bit smaller ending stocks. We always were around that billion bushel number for a lot of years. Now we're down to 775 for next year, and a price of 650 for wheat, which for wheat isn't too terrible. This is just another chart of showing all the ending stocks of those commodities on the corn and beans for the last 2 years, or this year we're going to finish up now. And like I said, once again, really tight inventories, especially on the corn and the beans. And then replenishing it a little bit on the corn, but not so much on the beans going into next season. It all depends, I think, a little bit on that acreage report. Do we get some more acres of beans and corn, or is it just going to be an increase in corn? And then how does our crop do? Obviously, we need the weather. A little bit of concerns I talked about the weather, that cold weather and that frost damage too. So I think they're going to be watching that really closely, like they always do, but even more so this year. Ethanol, that's another big demand item. I just wanted to quickly go over that. Ethanol had been obviously down dramatically last year due to the pandemic and people weren't driving. Now last week and then coming into this Memorial Day weekend, we actually have increased our gasoline demand to be equal or slightly above pre-pandemic levels. People are flying more. We're starting to see some travel. And as the vaccinations have come out and people are vaccinated, we actually seen these economies come around and using more corn. The green line on this is this year's usage or production and corn usage, and that tells you if it's above that red line that's on there, which that green dotted line is, the last several weeks, we're above the level we need to meet the annual demand in the USDA numbers. So good ethanol demand right now. It's the same chart, just kind of shows the same thing once again at the end of this chart, and you can see where it's dramatically different from last year. And then you have the stocks on there as well in this one, which tells you that our production was up in this last couple of weeks, but our stocks are going down. So we're producing more ethanol, but demand is outpacing that. So it's, once again, positive corn consumption and positive for the ethanol. This chart's the one I was trying. I think it was the last one, not the last one, but this one here shows you week over week average needed in production change, and you can see where year over year, once we took us to about the first part of April before we were producing more ethanol than a year ago, and that's when we were comparing pandemic to pandemic versus before that was pre-pandemic. So you can see how much it's really increased year over year now, and exactly why the ethanol market's doing well. This is just the China impact to show the imports and how that has changed in the last, since our marketing year kind of began last year, our new crop in the September frame all the way through till now. And the imports to China continue to bring in. Part of that due to that trade deal that was put together when Trump was in office, but more of it's just due to the fact that China needs a lot of stuff, whether it's corn, beans, copper, energy, whatever. Here's our corn imports from the U.S. and all other origins. And if you look at the 2020-21, that's where it's estimated to be combined versus what we were a year ago. So this corn import program with China was a little bit expected, but not. I mean, it's just been really good. Like the beans, everybody knew that was coming, and they were going to import a lot of beans. But the corn's been kind of a surprise, and that's really brought down our carryouts. And I'll just touch on the population. I thought this was kind of interesting. I saw, look at where the most people live in the world. And I guess the biggest thing I want to talk about here is just that you got to be bullish agriculture. The business that we're in is the most exciting business, the most important business in the world. And we have to feed everybody. Without that, we can't. We feed the world. And you look at the population, China and India growing at especially India growing at a high pace. They'll surpass China. I think some people said they already have, but I think they're just below them. Just world population is growing at a slower rate, but it's still going to continue to grow. And if you look at the forecast from 2020 to 2050, by 2050, some people are saying we'll have 10 billion people on this earth, and we need to continue to use technology. And the U.S. American farmer is going to be the leader in that as far as feeding the world going forward. So we have to be bullish agriculture. And these are the prices. Like I said, they're up 30 cents from there. This is from Friday's close, but they've moved up to decent levels. Let's end with that. They moved up to decent levels. I think, what do you do on the marketing side in this type of year? I think you continue to have your targets in place, at or above the marketplace a little bit. Don't be afraid to look ahead, even to 2022. I don't know if I go any further than that right now, but some of those values, they're lower than today, but they're pretty nice values and should be profitable in a lot of cases. So selling a little bit out there is not a bad thing. Use some strategies that can lock in the floor and leave some upside potential open. We have lots of those, and our farm marketing team can help you with that. A lot of people are concerned about selling in this uncertain environment, and either you don't have a crop or the price goes way up into some stratosphere numbers. There's things you can do, and you can afford to pay a little bit. They're not free, but you can afford to pay 20 cents or 30 cents on corn, it's not you don't want to, but you can with the prices where they're at, and leave that upside open. So there's some tools there that you can still do for the new crop that I think are good. But just selling some grain at these levels isn't bad either. Everybody's got different ideas and recommendations. 25 to 40% on corn and probably close to the same on beans is probably not way out of line for the 2021 crop that's in the field if it's getting off to a good start already today. So understand your risks and use the tools you're comfortable with. But we're we want to be the arm to help you make decisions and also to help educate. And we have a marketing team here that can help you with some of these tools. So don't be afraid to try something new. Even if, we do them in 1,000 bushel increments, so you can even do a small amount. And the best way I found out in my career to learn anything, especially when it comes to this confusing grain marketing stuff, when you puts and calls and all that stuff, is to do a contract and a small amount where you have skin in the game and you can follow through on the financial side. It's the best way to learn it, because people that think they're smart like me come up here and talk, and it's hard to follow. But if you can do it on your own and watch it through, and these other guys are better at education than I am, they can step you through that walk by walk. So, not saying it's for everybody, but there are some of those things that could be a good tool to use. And with that, we'll have questions at the end. If you have any questions right now, I'll take them. Otherwise, I'll turn it over to Lane. Cool. Well, one of the things we wanted to do was just get back to the basics, and Lane's going to talk a little bit about basis trading.
First, I'll give you a quick rundown of what the market's doing right now. It looks like the July contract and nearby is up 31 cents at 687.75. The D's contract is up 30 cents and a half at 576. The July soybean is up 22.75 at 15.53 1/4, and then the new crop is up 28 cents at 14.75. So yeah, my name's Lane, and I just hopefully by the end of this, marketing year, I'll get a chance to meet all of you guys at these marketing meetings and talk to you a little bit more. This is my first one. I've been with Premier for about a year now. Started, I think, May 11th, so just crested over a year. But like Doug said, because we're restarting, we kind of want to start at the basics a little bit, just because we don't know exactly what everyone knows. So some of this may be review for you guys. Some of it may be new. So I'll kind of jump into it now. So main question is, what is basis? It's one of the things that determines price more than anything. It's the difference between a specific futures month and a designated delivery period, whatever its cash price is. Down below, I have three different equations. They're using the same three components in each one, just in different orders, and they tell you a different thing. So futures minus cash price is basis. That's going to be kind of the topic of my presentation today. And then it's futures minus basis equals cash price, which is what you guys call and ask us every day. Hey, what are you guys currently paying, for fall delivery? And then it's cash plus basis equals what the Chicago Board Trade is at. And that's kind of it on that slide. The real question is, what does basis show? It shows the local supply and demand in the market. So as that changes, so will the basis. So as supply increases, basis will improve. As supply decreases, or as supply decreases, basis will improve. As supply increases, basis will worsen. And we'll kind of, as an elevator, we'll show our eagerness to buy towards you guys, how much space we have or the time of year by improving or decreasing that basis value. Rarely, kind of general basis doesn't remain at the same level for an extended period of time, because that local supply and demand, it's just constantly changing, just whatever happened in the current marketplace. So kind of way to follow it is, if demand is outpacing supply, basis will be a little bit better. If supply is outpacing demand, basis will be just a little worse off. There's several different factors that affect basis, and kind of that whole thing. Some more so than others. Like I said, probably the biggest one is local supply and demand. Overall supply and demand of a replacement crop. So for corn, it would be wheat. If there's a little bit more supply on wheat and it's a little cheaper, that's going to be sold a little bit more, and that might hurt the corn basis. Availability of transportation. So if we can't move the grain, if there's logistic issues, that's going to hurt the basis as well. Cost of transportation with increasing fuel costs that we have right now, that's could potentially make basis, a little bit worse off. Now, that's not taking into consideration our lack of supply that we have right now. Like I said, supply and demand, that's kind of the leading factor on that. Availability of storage. So during harvest times, as we're filling up, we may not be as eager to buy, commodities just for the fact that we don't have the room for it. So that might slow it up just a little bit. And then a few other things that might not quite affect it quite as much as quality factors, what we expect price to do, and then interest rates. And then one of the things that affects it almost as much as local supply and demand is local competition. I know a lot of people don't want to admit it, but if our neighbors to the south, northeast, west of us are paying a little bit better than us, we're going to be our feet are going to be at the fire a little bit to increase what we're paying. And then this slide is more or less just going to talk about how basis movements and how to word it, just so when we're talking, you guys understand what we're saying. The first thing is if it's narrowing, that's an improving basis. That means it's getting more and more positive. If it's weakening, widening, that's a weakening basis, so more and more negative, which is a lower cash price. Basics typically is that weakest point during harvest, just because the influx of supply and maybe the demand isn't quite as strong. But throughout the marketing year, that basis should improve, and we've kind of seen that this last year. At harvest, one point we were at 20 under. Now we got up to 20 over. As that marketing year has increased, so has basis, and that's kind of been a unique year because we've just continued to climb on the futures price and the basis price. That typically doesn't happen. So we're seeing some really good values. I mean, we've been up over $7 for cash corn. And then if you're going to set the basis prior to harvest, that September and August time frame is kind of the better time to do it. Historical values, those are the better numbers. And then kind of wrapping up a little bit, going to talk about the basis contracts. It's 1/2 of our pricing. Typically you would want to price a basis contract or set your basis when we're at historically strong levels, but you think the futures or, that other half of the pricing is going to increase a lot more. Now, another reason you would use it is if you were wanting to leave the futures open and not wanting to pay storage, like we saw this last harvest. We were at an inverse market, which was really good for a basis contract. So you could set the basis and roll into that inverse, and it would make your basis value essentially better for that next month you're going into, but it allows you to avoid the storage charges. So it doesn't work out that way every year, but this year's been a really good year for those contracts. The year before, not so much. You're rolling into a carry market, which is harmful for a basis, and we kind of tended to drop off on our futures because of the COVID hit, and it just kind of both went, negative against the contracts this last year. And then kind of different benefits of the basis, I've kind of touched on them a little bit already. It's locking in an attractive basis level, but it leaves room for futures and futures price improvement. You can get an advance payment up to 75% of what the current market is on the day you or whenever you want to get your advancement, you could get up to 75%. Now there is the little concern of that is if the markets crash like they did last year, you may have to pay back a little bit. So it's always good to be really mindful of that. And then, like I said, another big bonus is avoiding the storage cost. 'Cause I know a lot of people don't want to pay, DP or open storage. And then there's a few risks to basis, and I've kind of touched on them earlier, is futures price risk. So if the futures price just drops, that's going to hurt that basis contract because it's going to be a lower cash price than if you would have just set it on that day. And then another risk is, like I touched on earlier, is the rolling into a carry market. It's called spread risk. So, and I have a quick example I'll talk you through. Let's say we set the basis at 10 under the December, and the carry to the March is at 12 cents, and then we have a 1 cent roll fee on top of that. So that would turn that 10 under in the D's to 23 under the March because you subtract that 12 cents off of that carry into the new basis. It would essentially be the same cash sale if you would sell it right after you rolled it, but it's our way of keeping the relation of that basis contract that you had on there. Now, if futures improved, you're still getting that improvement. And then, like I said, you're unable to improve in basis improvement. So let's say you set the basis at 20 under and basis goes to 5 under, you're essentially missing out 15 cents on these contracts. So there's pros and cons of these, and we can dive into them a little bit deeper. That kind of wraps up what I have, and if you guys have any questions, I'll be more than willing to take them. None? All right, I'm going to turn it over to Darren. He's going to be talking about HTA contracts.
Hello, my name is Darren Wax. I work out of our Sydney location. I've worked for Premier for going on 4 years now. First 2.5 was in operations in our northern region, Dewey, Fisher, Elliott area. And then I've been in this role for just a little bit over a year now. So nice to meet you all, and look forward to doing more of these as we go along. So I'll jump right into HTA contracts, which is kind of the other side of what Lane was talking about. Lane mentioned you have your futures and basis that make your cash price. The HTA contract is a futures contract where you hold out on setting the basis, so you don't know what your cash price is going to be until you decide to set your basis. What an HTA is, HTA stands for Hedge to Arrive. HTAs allow the producer to set the futures for a delivery period without establishing a basis at that time. The producer can then establish a basis anytime prior to delivery of the grain. If this sounds familiar, we kind of offer this contract already and have in the past. We've called it an NBE, or a no basis established. As we go towards this new accounting software, we're going to change that term. We're going to call these HTAs now. An example of how HTA contracts have a risk and reward. Let's say we're looking at Deese corn futures. They're sitting at $5, and the Premier fall basis is at 25 under. It's your belief that prices are not going to increase anymore. The prices are going to start falling off, but you think that that basis will improve. You would set an HTA at $5. So your maximum futures price is locked in at $5, and you're waiting for that basis to improve to set that basis to get a higher final price. Scenario A, prices fall down to $4.75. Not a big deal because we're locked in at $5. Basis improves to 15 under. You pick up the 10 cents advantage in the basis there when you set your basis upon delivery. Scenario B, the futures price increases to $5.25. You've missed out on that 25 cents on the futures because you're locked in at $5. The basis expands to 35 under, so now you're 10 cents out further on your basis. Instead of having that $4.75 sale, you're now down to a $4.65 sale. So those are kind of the risks and rewards of using these kinds of contracts. You got to be careful and make sure that it's the right time to lock in that price and make sure that basis is we don't lose out on basis. Some of the pros, obviously your futures price is locked in, so you're protected from decreasing market. You have the ability to take advantage of strengthening basis, and my screen go black. It's easier to roll your futures delivery period within the same crop year. So we're not going to carry a basis or an HTA contract from 21 crop into 22 crop. We're going to have those settle out by the end of the year, but you can carry them throughout the year by rolling those, much like Lane told you about rolling basis. The cons, there is no protection for weakening basis. If the basis goes from 25 under when you establish the HTA contract, it goes to $1 under, you're not protected on that. So if we do these kind of contracts, we need to keep a close eye on the basis, and if it starts to get away from us, we got to make sure that we kind of cut that off. If it goes from 25 to 35 under and it doesn't look like it's going to come back, we're going to have to set that be on top of setting that before it gets away from us. Another con for these contracts is they do have service fees. 3 cents for corn, 5 cents for beans. So just another thing to think about if we're not expecting a huge advantage in a strengthening basis. Say basis is 10 under at the time we set this contract. Chances are we're not going to see more than a 3 to 5 cent increase in that basis. Probably not the best option to go with this contract. So those are just a couple of things to think about on the future side of setting contracts with us. And this, unrelated, brand new bin put up here at Sydney. They just finished that a couple weeks ago. It's big and tall and shiny, and we're going to fill it with beans.
What's the capacity?
800,000.
Yeah.
So it's about the largest, it's 105 diameter, about the smallest you can make them. I don't know how height that it is, but it's pretty tall, it was 140 feet at heat, I believe. So 105 feet wide, 140 feet tall, where you have to peak, whatever, but it's tall, big bend, the largest to make of that size unless you go wider in diameter. So we're excited about that bend bringing in, it'll allow us to be able to hold about 4 additional trains of grain at harvest time. We ship 50-car trains out of there, and then we don't have to ship at generally the weakest basis or the poorest time to ship that commodity. So hopefully that'll help us be able to capture that grain a little bit longer and be competitive.
Yep. Yep. I think it'll also help make that Sydney elevator a little more accessible to our customers and in that fall rush. So. All right.
That's open for any questions anybody's got. The only thing I'd say about basis and HTA, no, these questions, quick, was basis and HTA is that obviously what's most important to you guys is the cash price. Basic HTA and basis are tools to get to that cash price, and that's part of how we determine our price and understanding how they work. You need to know that and when to use them and when not to use them. But ultimately, let's work on the best cash price we can possibly get at that time, and that's what's important.
Mm-hmm.
So, question? Yes.
Yeah, I do. That changing to the hedge to ride, changing to the delivery period. Kind of talk about that a little bit more. I think.
Okay.
Is it the delivery period or is it the futures month you're following?
You can set it for any futures month, technically. Say today we want to look at one for fall. We would look at December corn, and we would set an HTA out at that price. And then you would be looking at our fall basis going forward to decide what you want to set, when you want to set the basis against that December price. Does that make more sense?
So the futures are the December futures, that's what you set it against. The delivery period could be October or November prior to that delivery period, but you would use the December futures for October, November. For example, if you want to use the summertime, you use July futures for like June or July delivery, and you lock that futures in, the HTA for July, you're gonna deliver in that period of time. So it's both. It's the delivery period, but it's the futures that would go most likely correspond with that delivery period. Now, if you roll that ahead, let's say you had a December futures and you're gonna deliver it in the fall, and you get to just before harvest and you know that you're gonna maybe keep it in the bin or something, and you wanna roll that ahead, there's a good carry in the market, you could roll that futures to March or May or July. As long as it's the same crop year, we can roll that ahead and you can still deliver it in that marketing year. If you haven't set the basis yet, it's easier to roll it into those timeframes. But most generally, you're right, you'd use a December futures for new crop delivery, July futures for summer delivery, and so that's how you would write those contracts up as.
But you have to set the basis before you can deliver.
Set the basis before delivery, yes, correct. Well, yeah.
Or
needs to be set.
during delivery.
Or,
Yeah.
right,
Yep.
delivery.
Yep.
But, yeah, right. Before that contract's finalized, you have to set the basis, and otherwise you would, you don't have a flat price and you have to go into storage or delayed price or something, so that probably wouldn't be beneficial there, but, yep. So, those contracts work good. The other thing is you can do them for multiple years. Quite often, when you're further out from the delivery period, you will have a wider basis, not always, but sometimes, so that's when they're more popular, is to say, okay, I'll pay that 3 cents or that 5 cents, because I know that there's a good chance the basis will get better. When you get closer to delivery time, there's not gonna be as much fluctuation, although we just talked about all the reasons it can change basis, and then you'll have something like happen this year where I really don't see where demand changed in the crush plant where they have all the beans they need for the end of the year, but all of a sudden they drop basis 50 cents without really any notice to the marketplace. And got a lot of people baffled, and it's the year we're in. I mean, there is some less demand because of the higher prices, but, so no matter what you do, it's just another risk tool, but it's, part of the equation. Any other questions? Perfect time, otherwise we can sure ask them, while you're still here, you can go up
I
and
guess
talk.
I have one question. From your software that you have, can you tell what most customers typically do when they're marketing their crop? Do they just kind of sell it when they see that the price maybe is good for what they want? Or do they use a lot of these tools that you're telling us about? Or what is the percentage perhaps of usage of some of these?
That's a real good question, and I'll say this, with our new software we're gonna be putting in place, it's gonna have some, software pieces attached to that called Tableau, where we'll do more of those analytics, and we'll be able to track, our current software not so much, but this new software, eventually as we get some data, when it's sold, you know, what, be able to also maybe take a look at it, as we're going to go down that road where you can see how you did against your peers, you know, as far as your average price for that crop, that type of thing. So there's some of those things, more of that type of data coming, but from this observation, it's a wide range. I would say percentage-wise, we're seeing more and more people use some of these, marketing tools, whether it's HTA or Basis or these accumulators or OTC products that we have on a percentage of their crop to try to enhance their price and especially when these opportunities are here to lower their risk on the downside. We're seeing more of those more sophisticated contracts, but majority of it is still just a regular sale when you think the cash is right for your operation and, or when you need cash flow. That's another big one as well. I mean, obviously, you'd like to have a plan, but part of your plan needs to be cash flow needs. When are your rents due? When's your combine payment? When's the farm payment? Whatever. You need to plan things around that as well. I mean, ideally, you say, well, I'm only gonna sell when the price hits $5, but, you know, a lot of times you didn't have that opportunity. So you gotta go with cash flow as part of your plan as well. But I would say it's a mixture of everything, but still a majority of it is when they see the prices are right, they'll contract or sell cash out of the bin or out of the storage. And then cash flow would be the second reason, most common time when grain is sold. We're trying to get more opportunities when you see things like this year, which how often they come around, and you can lock in a pretty good margin, be a little more aggressive in your sales, but maybe leave it upside open, and hopefully enhance the farm price. That's the only reason why we're here from the grain side of the co-op, is to help, I mean, really, is to try to help enhance the farm price. We're not always gonna hit the home run and have the best number, but hopefully we can bring the value to help put together a plan so that, you know, we can get a better price at the farm.
Well, it is really beneficial to be able to get the information on your phone, you know, the markets, because like you said, you don't know when it's go up and down. It could be huge amounts in a short period of time, but you know, you can call and make that sale, but,
Those
you know,
text
by
messages or-
having that available.
Yeah, those text messages as to what the
Mhm.
market is doing is.
Yeah, we appreciate that feedback, and if anything else you want to see more readily or a different format or a different form, you let us know, we'll work to get that out there. I mean, it is amazing now with technology, how we're all connected if we want to be, really quickly, so sometimes you don't want to be connected. But,
Finances is good.
yeah. I would say the other thing on that is open offers work really well, as, you know, if you have a target price in mind that's above the market, or, you know, you feel like it's gonna be a profitable sale for your farm or something you wanna look at. We've bought a lot of grain off of those, these up days, when you get a limited up day, you'll get it, and by the time you see the markets at noon, or even see your text message, it could be 20 cents different in this environment. So those open offers work really good too, so I would suggest, you know, if you have targets in mind, let us know, and we can have them working for you whenever the market's trading, so.
When you introduced that new software in August, I think I heard you say, is that going to mean that we need to change things on our computers to log into that new system? I mean, right now, it's pretty,
I can speak to that. There will be a little bit. So some folks access our current portal through the website. We will have that link redirecting to our new portal.
okay,
We will also be making available a mobile app.
great.
So I think there'll be a lot of folks trend away through time, over time, excuse me, to the mobile app versus accessing through the website.
Mhm.
If it's one click and you can just have your information saved, that'll be pretty handy.
Right.
So there will be an initial setup process to get, you know, your customer number will stay stay the same, but your password might change. You know what I mean?
Okay, sure.